before 2004, it was very easy for firms to reincorporate overseas. All they needed to do was just decide one day, I don't want to be a US firm, I want to be in Ireland, go start a firm in Ireland and reincorporate. So the American Jobs Creation Act had a clause in it which made that illegal, which basically put a high bar in terms of the new shareholders that you have to acquire if you are moving overseas. And now in reaction to that, companies have now started these merger inversions where they merge with a large company overseas and thereby acquire sufficient new assets and sufficient new shareholders so that they can circumvent the Treasury rule. These 240 firms reached this status over a period of time. So while inversions is the media's scrutiny on inversions is recent, we find that these companies have been moving overseas slowly over a long period of time. Different countries were in flavor at different points in time. Sometimes they went to Bermuda, sometimes to Ireland, sometimes to Canada, but this has been happening over a period of time. And interestingly enough, recently the migration to Canada has picked up steam, especially after they have brought down their tax rates, significantly brought down their corporate tax rates. And so this is a short-term fix to the problem. It might stop a few deals, but it is not going to overcome the significant disparity in the marginal tax rates between the US and the rest of the developed world, and more important, and these tax havens where the marginal tax rate is zero. So that's a much more long-term problem which needs a long-term fix in terms of having a relook at our marginal tax rates.